Welcome to another episode. This is episode number 3 of the Forex Foundations course. Now, I will leave a link in the description down below for the full playlist so you can catch up if you haven't already watched episode 1 and 2 of the playlist. Now, in this episode, we're going to be talking about trends. So in specific, we're going to be talking about an uptrend, a downtrend. We're also going to be talking about what is a consolidation. Then we'll go into details about substructure, and then we'll go through the past data of the market and give you live practical examples of how to spot them when you are trading. Now, to get started, let's first discuss the theory of these different trends. So the first trend we'll be discussing is a uptrend. So if I write it out over here, an uptrend is basically when the price is creating higher highs and higher lows. And as you can see, this is a nice theoretical example of that happening. So right over here, we can write higher lows. This one will be a higher low. And then if we copy that over to this place, this is the exact same thing. It's a higher low. And then these points over here are your higher highs. So we're just going to annotate it like this so it's understandable. So this is the key characteristic of an uptrend. You're going to be having higher highs and higher lows being created in an uptrend. And similarly, for a downtrend, it's going to be the complete opposite, where you have lower lows and lower highs being created. So if we copy and paste this over here. So with the downtrend, you have the same thing, but just flipped the other way around, where you're creating lower lows and lower highs as such. Now, this is the very basic principle of what a uptrend and a downtrend is, but we're now going to go into a little bit more detail for the beginners which may not know specifically what to be looking for. So let's just quickly annotate these properly. So these will be called our lower highs and lower lows. This is another lower high point right over here, and this will be a lower low point as such. Right, so now we've discussed that, one very important rule that we need to go over is the fact that when you do have an uptrend, for example, as such, you need the higher high to be broken and creating a new higher high before this higher low is valid. So what do I mean by that? So over here, what I mean by that is the fact that if you want to establish a higher low, which is this point over here, this higher low can only be validated once this impulsive move breaks this higher high point as such. Once you see this happening right over here, this is what creates this higher low point. If price does not break above the higher high point, this is no longer a higher low point. This is just a potential higher low, but once this is broken, this is where you now call this an established higher low point. What does that mean? That means once this becomes a established higher low point, price will need to break this higher low point like such for us to get a change of trends. So this is a very important rule which no one really talks about, but is extremely important to know. And similarly, if you're in a downtrend, as you can see, you will need this lower low to be broken, creating another lower low for this lower high to be established. So if we annotate it to make it nice and clear, you have a lower low point right over here. You then need a break of this lower low point before we can conclude that this is an established higher low point. And we can only conclude that once this lower low point has been broken, creating another lower low right over here, as you can see. So that's how you're going to understand if a trend is going to be broken. So if we're in a downtrend and price then starts coming up and we break this lower high point, now you know, okay, price has switched from a downtrend into an uptrend because this established lower high point has been broken. Now, if we talk about a consolidation, so if we again annotate right over here, if I will just copy and paste it over to make it nice and quick. So now let's talk about consolidations. Now consolidation, people usually just say, oh, a consolidation is when the market just ranging like this. Now this is like a general rule, but we need to be a bit more specific on what exactly a consolidation is. Now, consolidation can usually occur after an uptrend once the price wants to rest. So if we take that scenario happening, you see price creating higher highs and higher lows, and then price has then again created another higher low point, and then it becomes established once this higher high has been broken. But now a consolidation occurs when price is failing to create a lower low and a lower high point. So in other words, price is just simply remaining in between the two bounds. So if we again annotate it properly to make it make sense, if this is your higher low point and then this is your higher high point, let's bring another one. This is your next higher high point, and this over here is your higher low point. Now, after this retracement down, what do we expect? We expect another higher high to be created to continue with the uptrend. But since we failed to create a higher high point, since this high has not been broken, since we failed to create a higher high point, we then are going to expect, since it can't create a higher high, then it needs to create a lower low. And in this case, it also failed to create a lower low as well. So as you can see, this would have been our potential higher low point. But as I said, since this was not able to get broken, this is no longer an established higher low point. Rather, it's this one over here. So we will need price to break this lower low for us to get change in trend, to go from an uptrend to a downtrend. So overall, if you look at this, we're still in an uptrend, but price has now started to consolidate because it's failing to create higher highs, and it's also failing to create lower lows as well. So within this range, we're just consolidating, but overall we are in an uptrend. Now from here, price can do two things. It can continue and create another higher high, which will just resume the uptrend we was in after this consolidation, or price can retrace back down lower, breaking the high low point, and now price has now flipped from a downtrend, from uptrend to a downtrend over here. So again, if we label it properly, you've got a lower low right over here and a lower high point right over here. So that's basically a consolidation. It is when price is failing to create higher highs and it's also failing to create lower lows. So once you got this sort of range, it's in a consolidation. Now lastly, the last thing I want to discuss is substructure. So when it comes to substructure, this is again something not many people talk about. They just talk about the basic uptrend and downtrend, but price action is more than just a simple uptrend and a downtrend or a simple consolidation. What price does do, and if you stick around to the end, I'll go through real life examples, reading price action candle by candle to explain what trends we're in and what substructure we may potentially be encountering and how to capitalize off that. So let's just take an uptrend example again. If we're in an uptrend, price is creating higher highs and higher lows, and as I said, if we get our annotations correct, this is our higher low point, and this point over here will be our higher high point. Now, like I told you in the previous rule, unless this low gets broken right over here, unless the higher low point is broken, we're going to remain in an uptrend. So substructure is then price failing to create a higher high, and it continues to create lower lows and lower highs until we get to our main demand level, which is our main higher low point, before we see the overall push up. Because price is still overall in an uptrend if you look and zoom back out. However, price is just currently retracing, and whilst it's retracing, it's creating lower lows and lower highs until it gets back down into the higher low point, which is the beginning of that huge impulsive move up. And another way of looking at it is this push up occurred in one straight move. However, the same move back down to the same original starting place took many retracements and many impulses to get to the same spot. So that just shows you this point is much stronger than this downtrend move over here. So that's basically substructure. Now I can also give you an example of a downtrend substructure, which is again creating lower lows and lower highs. And once price starts to create many higher highs and many higher lows, we're in an uptrend. And as long as this higher lower high point holds, we're still in a downtrend. However, if price does break above this point, for example, then this point right over here will be our new and established higher low point. So we would then have broken structure and would have changed trend to an uptrend. So right over here we're in a downtrend, price has retraced up, but this retracement has now given us a huge impulsive move, breaking this major supply which we expected to hold and continue down. But since it broke, now this determines the fact that downtrend has ended and now an uptrend has started. And unless this point over here, which is the higher low point, can break, we're in an overall uptrend, and we expect price to continue up, creating new higher highs and higher lows. So now that's the theory side covered. Let's go on over to the charts and see how we can determine these different trends in the real life markets. Right, so let's take a look at GBP USD and let's take this as an example. So what I'll do is I'll start from this point right over here, which is the 20th of September 2023, and I'll go through the entire price action until current price and go through what trends we see and what transitions we are seeing, like we discussed in the theory. So if you start from this point over here, you can see a nice clean impulsive move to the downside. So we can see that currently we're in a nice downtrend, and then we've seen a retracement, which is going to be our lower high point, followed by another lower low. So at this point we're in a downtrend, creating lower lows, lower highs, lower lows. So until this high point over here gets broken, or we continue to create lower lows from this point, everything within this is just substructure, which is what we was talking about. So if you look at everything within this, you can see price retraced, failed to create a lower low. So at this point we should have seen another push down, but price ran out of momentum and instead resumed in a nice uptrend. And as you can see, price did come back into our level of supply and give us a nice reaction down, but we was not able to sustain the overall impulsive push up, and instead we broke structure to the upside. So now at this point, price is now bullish, and we've flipped from bearish to bullish because we've broken this lower high point, and now our most established level of demand for our higher low point is right over here. So you can see price has come back down, giving us a nice reaction, and then ultimately broke that higher low point. So we've gone from an uptrend to again a downtrend. So you see we're switching to a downtrend again, and again we're just consolidating at this point. So this is where we went and talked about consolidation, because price is failing to create higher highs and it's also failing to create lower lows. So right now we're just consolidating, and eventually price does, again, price has not really broken this low, even though we've seen a candle close below, but we've seen a candle close right back above. So this point right over here, if I highlight it nice and clearly, you can see this is just a fake out. This is just manipulation happening, because we've seen one candle break below and then immediately the next candle has broken back above, and we've continued to hold this level. So currently price is holding this low, and price is also staying below this high point over here, and then eventually price has managed to break above, and now we've gone from a downtrend to a consolidation right over here to now an uptrend right over here as such. Now from there you can see we need to break these lows right over here. So unless this low gets broken, price is still in a uptrend. So price is currently uptrend from this higher low point. Price again broke below right over here. So now we've switched from a uptrend to a downtrend. So we've gone from a nice impulsive push up, followed by substructure causing a nice downtrend, and then we've broken the overall higher low point. So now we're in a downtrend, and price is retraced, failed to create a lower low, and it's come back up into our level of supply and respected that beautifully. So right over here, this is my lower high point, this is my lower low point right over here, and price retraced, failed to create a lower low, created a higher high, came back into our lower high point, which is our supply level, gave us a nice reaction down. But since we're in a mini uptrend, as you can see, price also respected this higher low point and ultimately pushed to the upside, followed by a retracement and then another push up. So currently, if you look at the live market, GBP USD is in a uptrend, and it's an uptrend from this zone right over here, which is what we will classify as a higher low point as such. So this point right over here is my higher low point. Price is now currently in a mini downtrend and it's come back down, and now what I'm expecting is a push up at least into here or even further up into here before I see another reaction to the downside, because we'll resume that downtrend. So you need to understand where you are in structure, and you can use the higher time frame to determine your bias on a lower time frame. So currently we're just in an uptrend, but price is also forming lower lows and lower highs in a mini downtrend. So I'm expecting a nice reaction up and then a nice push down. So I hope you guys did find this informative. This is just a brief introduction for the beginners to understand what trends are, and to also understand that trends are not just the basic higher highs and higher lows and lower highs like a lot of YouTube videos go. There's actually a lot more depth which comes into the market, because you have things like consolidation and substructure and trends within trends, which you need to be able to read and know where price is at all times. So if you guys did find this informative, be sure to drop a like, subscribe, and I'll see you guys next time.